My name's Carolyn Rosetta-Walsh. I'm a Senior Manager here within the Vincents Audit and Assurance Division. I have approximately 14 years audit experience. I've been with Vincents for about 2.5 years now, working closely with our Key Director, Peter Shevel. Prior to that, I worked with Deloitte for about 9 years and then was based with a firm in Canberra for a few years as well. Throughout my audit career, I've been really fortunate to have a number of varied audit experiences, from financial statement audit through to internal audit, and then more compliance type audits, including trust accounts. So hopefully today will be insightful for you all and will help you with your upcoming annual audits. Now, if any of you have questions throughout the webinar, please feel free to send these through. Depending on time, I'll try and address them, but I may need to get back to you over the next couple of days if we can't get to them. Okay, trust accounting. What is a trust account? Well, a trust account basically exists when someone, a company or a licensee, holds funds for a specific purpose. That might be they're holding funds as compensation in a legal matter. You know, it might be deposit for a purchase or a rental of real estate. Might be ongoing rental fees for real estate. Could be deposits or funds for purchase of motor vehicles, and it may be something as simple as at Vincents we have a trust account in case we want clients to put funds into it prior to conducting any work, or in case we need to hold funds on behalf of our clients. So these are the general reasons why we have trust accounts, as I'm sure you're all aware. What are the different types of trust accounts we're going to cover today? These are the ones I've listed here are the ones that we predominantly deal with here at Vincents, and the ones I thought would be most relevant to cover. So they're the Solicitors trust accounts, coming under the Legal Profession Act and Legal Profession Regulations within Queensland, and the relevant regulatory authority is the Queensland Law Society. Now, for those of you that are administering solicitor trust accounts, I would encourage you to utilise the Queensland Law Society webpage and their contacts within the society there. I've found them to be very helpful over the past number of years. And always willing to address any queries that I may have. So just don't be afraid to draw on these authorities, particularly if you have something that's a little bit tricky or you're not quite sure how to deal with it. Definitely give them a call and see if they can help you. Some other types of trust accounts are the real estate trust accounts. Now, here in Queensland, there was just a recent change in the relevant legislation. Used to be the Property Agents and Motor Dealers Act. It's now changed to the Agents Financial Administration Act and associated regulations. They're administered by the Office of Fair Trading, and the reason for the change in those that legislation was to reduce red tape. Now, from what I've read of the changes, yes, it has had a reduction in red tape in certain areas of that act, but predominantly the accounting and audit areas still remain the same. So there shouldn't be too much of a difference for those of you that are administering real estate trust accounts in terms of your obligations. And the third one I've listed, type of trust account I've listed there, is the public account and trust accounts. So these are, you know, things like what we have here at Vincents. It's basically where, you know, you've got a public accountant holding funds on behalf of someone else for a particular reason, and they're administered by the relevant body is the Department of Justice and Attorney General. One key thing I would say to you all is it's really important to understand your obligations in relation to the applicable legislation that your trust account falls under. If you can understand the accounting and audit requirements or what your obligations are in terms of record keeping, then you're going a long way to making sure that you're in compliance with that legislation. Quite often when we see non-compliances is when our clients don't fully understand what their obligations are. So again, highly encourage you to talk to your regulatory authorities, have a look at the acts and the relevant regulations as well, and also make use of your auditors and advisors and ask them any queries that you may have along the way. Okay, so what's a typical annual audit process? Okay, generally you have to appoint an auditor at the incorporation of the trust account, and for whatever reason along the way you may choose to change your your auditor may choose to resign. So you just have to make sure that you have a current auditor appointed, and if required, that you've notified the relevant authority of that auditor appointment. So once you have your auditor appointed, they're coming along for their annual audit visit, and they need to do some field work. So that's typically where we come in. We have a look at all of your books and records. We have a look at the systems that you use to administer your trust accounts, and we'll do some specific transactional testing to determine that you are administering the trust account in accordance with the relevant Act and regulations. During that process also, we tend to have a look at, the required monthly reporting, and just ticking off to see that you guys are definitely administering the trust account in accordance with whatever those obligations may be. And we'll go into the types of things that we look at in more detail in the next few slides. The type of reporting that you can expect to receive out of your annual audit process. As auditors, we're obliged to report any non-compliances or any breaches of the legislation to the relevant regulatory authority. So we often find ourselves in a hard situation because these are compliance audits. We have very limited scope to go, well, do you know what? We don't feel that we can't really use materiality in the trust account audits because we're looking at compliance. So it's a bit more cut and dry. It's a bit more, has this particular entity complied with the relevant legislation, or, have they missed out on compliance? What your auditor should be doing is discussing any potential non-compliances with you before they're coming up in a report, making sure that they have all of their facts correct when they're reporting those non-compliances, and if there's a specific reason for a non-compliance, that they're reporting that to the regulatory authority as well. It may be that your trust accountant fell ill, so therefore they couldn't complete the monthly reconciliations within the right number of business days after month end. If that's what's happened, you've got a genuine reason for it, you can let your auditor know, and hopefully they'll be able to record that information in the audit report for you. And then if you want to, you can always contact the relevant regulatory authority and go, look, yes, this happened. We now have these processes in place to deal with that should that happen again, to try and prevent non-compliances in the future. And lastly, from your auditor, they should be giving you any suggestions for the improvement of your trust account administration. So your auditor is generally visiting a lot of different places. They're seeing how other people deal with the trust account administration, and I guess they have a lot of best practice for you. So definitely pick your auditor's brain, get their information, what they have, find out the best ways that they're seeing people administer trust accounts, complete their monthly reporting requirements, get all those tips and tricks from them, and hopefully they're giving you a really good management letter to help you improve the efficiency and your own internal controls for those trust accounts. Okay, when you're preparing for your annual audit, really encourage you all to talk to your auditor in advance. So don't go, okay, my annual audit, my financial year end for my trust accounts is coming up. My auditor will be in touch with me. Generally, yeah, they will, but it's always, as auditors, we love it when our clients are on the front foot. We love hearing that, hey, we know that you're coming, our year end's coming up, we know that you should be coming in soon. Can we lock in some time? That way, as a client, if you get in first, you've got a better chance of getting a time that suits you, making sure you've got plenty of time before the deadline for reporting. Ask your auditor if they've got any specific focus areas this year. They may have identified some non-compliances last year, so they're going to be looking at those types of non-compliances again. Or, has the regulatory authority given the auditors a heads up for the specific focus that the regulatory authority has? Just find out from the auditor what their feeling is. Are there any particular areas that you need to be wary of, or to make sure that you have really well prepared? Check with your auditor about any items that they're going to want to see. For example, pretty much every auditor of a trust account will want to see your monthly bank reconciliations. They'll want to see your bank statements for the year. What required monthly reporting do you have to complete? Do they want to look at every month, or do they want to look at some months? Your auditor should be checking that your trust ledger reconciles with the trust cash book, that the trust ledger has been reconciled to the bank. They're likely to want to be looking at a sample of matter files and testing the transactions within, making sure that you have all the appropriate trust account authorities, etc. on file. And your auditor is probably going to want to see any correspondence that you may have had with your regulatory authority. It's a good idea to give your auditor the heads up of any known breaches that you may have. Discuss these up front with your auditor. It helps them, instead of them going, oh wow, look at this, they've had a non-compliance throughout the year, the trust account's gone into a negative balance, why has that happened? You tell us up front and it makes our job easier. We're all on the same page. Give us an explanation of why that breach occurred, like I discussed earlier, and then we can basically put that to the side, complete the rest of our compliance work, and then we can report those known breaches within the reports. Now, if you have any pre-audit checklists that are available either from your auditor or from your regulatory body, please do your best to complete those. For example, the QLS's voluntary external examiners checklist, it's really detailed, and whilst it does say it's voluntary, the QLS does highly recommend that all clients complete those. They're quite detailed, but I think they give our clients a really good heads up in terms of the types of things that we're going to be looking at. They're very thorough. They go through the different types of system issues, monthly reporting, specific legislative items that we need to check that you guys are in compliance with. And they're really good because they have links back to the relevant legislation as well. So if you have any of those types of things available, please complete those before the audit. They're good to keep on hand throughout the year, just to keep you up to date with what your requirements are. Moving on to some of the common issues that we see with trust accounts. Surprisingly, one of the most common issues we have common non-compliances, is that monthly reconciliations aren't being completed within the required time frame, or in certain instances we've had those being completed before the end of month. So generally, most of the legislation has strict time requirements, so it's usually between 10 to 15 business days of month end when those reconciliations need to be completed by. We have seen instances where trust accountants have completed monthly reconciliations prior to month end. Now, unfortunately, for our purposes, that is technically a non-compliance. So if you're going to be doing reconciliations partway through the month, make sure that you're doing a second one for that month end and recording that in your trust accounting files. It's also another issue that we have is not all of the software, when things are completed electronically, not all software will allow you to record a date stamp when that reconciliation was actually completed. So we've had instances where trust accountants have completed reconciliations throughout the year, and they've completed those electronically, but because they haven't printed them out at the time, or they haven't saved them electronically, as like a PDF document at the time, the trust system, once they've printed them all out for audit, will print the date that those reports were printed on, not the date that they were completed on. So unfortunately, as auditors, if that is our evidence, then we have to report that those reconciliations were not completed within the required time frame and not within an appropriate time frame. Obviously, in instances like that, we can say that the trust accountant provided the explanation that these were completed electronically and then updated and physically printed at month end. However, it's still a non-compliance that everybody really does want to have a really clean audit report with no non-compliances. So that's a really easy one to get around. Make sure you've got your diary, your calendar appointment to complete the monthly reconciliations, or if someone's doing those for you, that you've got a reminder for them. You're checking up to make sure that they have been completed within the required time frame. One of the other things I would recommend with your monthly reconciliations also is that you have a review. You have someone review those reconciliations. So we have a preparer and a reviewer. I know some trust accounting operations are quite small, but generally you should be able to have someone who prepares it and someone who reviews those. Put a little signature on the manual documents if it's manual. If it's an electronic document, see if you can put a text box on there that says, hi, I'm Carolyn, I've reviewed Mary's work, and I've completed my review on this date. It's good business practice, and it makes sure that it's good governance, and it's making sure that someone else is just doing that final or a double check for you to determine that yes, this reconciliation has been completed and it's been completed properly. Because unfortunately we have seen instances where there's been variances on reconciliations that haven't been followed up, which again is a non-compliance. Other common issues that we see are bank fees and interest being charged to trust accounts when those particular trust accounts are not meant to have any bank fees or any interest charged to them. So, like for example, bank fees should be taken out of your general account, not your trust account, unless it's been set up for a specific purpose and your clients have given direction for those bank fees and interest to be charged to the trust account. So that's it's more of an administrative one, but it can be a non-compliance as well. Another significant non-compliance is the overdrawing of either your trust bank account or the trust ledger. Now, this should never happen, given the purpose of a trust account, but it's surprising how many times trust ledgers or trust bank accounts are overdrawn. So generally where we see bank accounts overdrawn, it's because a transaction's doubled up, or someone thought a transaction hasn't gone through and they've processed the transaction twice, or it's where bank fees have been charged to the trust account, and which then causes that trust account to go into a negative balance. And trust ledgers, hopefully your software has been set up to not allow any overdrawing of trust ledgers. However, we have seen certain instances where trust ledgers have been overdrawn, and this is predominantly on systems that are not as widely used for trust accounting. So those systems that have been set up specifically for trust accounting, they're generally the ones where you can't overdraw a trust ledger when you're doing journals or processing transactions. However, we have seen instances where ledgers have been overdrawn. Another common one is trust account statements either just not being sent out, or they don't include the required information from the legislation. So there is a requirement that if you have funds on trust, that at least annually trust account statements are sent out to the clients. A number of times we see that trust account statements are not being sent out. So that's another really simple one that, at least once a year you make sure that, if it's 30th of June or whatever day, that you make sure you send out a trust account statement to everyone who's on your trust ledger. Okay, some other issues that we've seen are where receipt numbers are not issued in sequential order. Again, most systems these days are sophisticated enough to ensure that trust receipts are issued in sequential order. However, instances can happen where receipts are either cancelled. Hopefully your system will retain a record of that receipt being used and have a way of determining that that's been, or identifying that that receipt has been cancelled. Or we have seen instances where receipts have been deleted from a system, and so, or a trust accountant has started using a specific sequence of receipts and has then decided, for whatever reason, okay, I'm going to change the sequence and I'm going to start, I've been using 0 to 1,000, now I'm going to start using 2,000 to 3,000. When these types of things happen, we have to report those non-sequential order and gaps in the order to to the regulatory authorities. Issue being that, you know, receipts may have been issued that we haven't seen, or they've been deleted and we don't know what's happened with them. Other issues are where receipts or checks don't include all of the required information. So in each one of those, in each trust accounting legislation, there is required information that has to be recorded on your receipts and on your checks. Now, in particular, the QLS is very particular about the type of information to be recorded. And when they do their own external audits of practitioners, these are some of the things that they're looking for as well. I've had other instances where the Office of Fair Trading has done reviews of clients or audits of clients, and they've picked up you know, where receipts or checks haven't included all of the required information. Fortunately, we had also recorded that in our audit reports. So just make sure that those, if you have any issues with receipts or checks, even if it's an issue with the bank, that you're recording that, you know, you've been corresponding with the bank to try and get the required information included on your checks, but for whatever reason it can't happen. And I guess nowadays, with a lot of transactions being undertaken via EFT, there's less use of checks, so these issues are not as prevalent. Some of the other things that we unfortunately see are that trust account authorities are not being retained on file. Now, quite often, you know, there's a specific authority for a specific type of funds, or a client wants their funds dealt with in a particular way. We've had instances where, you know, information has been retained on a client file or a particular matter file, but it hasn't been able to be located in the trust accounting file. So just whatever system that you're using to record and retain your information, make sure that when it comes to, you know, your trust accounting, that you can go, okay, yeah, well, look, Mr. and Mrs. Smith have asked us to record this information in this particular way, and they've given us authority to do this with their funds, so we're going to keep that with our trust accounting reporting, if that's how we keep it. We're going to have a note in the trust account system that, you know, Mr. and Mrs. Smith's trust account authority is recorded in their matter file number XYZ123, just so that you can link all of those things together when the auditors come in and they're like, well, why did you do this with Mr. and Mrs. Smith's money? You can go, absolutely, here you go, here's the authority from Mr. and Mrs. Smith, and everybody's happy. Last point there is that trust account software allows records to be deleted, which I guess I touched on it earlier with receipt numbers. If you are using a particular software, make sure that the records within that software are not able to be deleted completely. So that's something, if your trust accountant accidentally records something in the wrong trust ledger, that a journal is required then to transfer the funds from one client ledger to the appropriate client ledger, and that all of that documentation is maintained. We would have to report a non-compliance if we had identified where records could be deleted within a trust account system. Okay, and then specific to solicitor trusts, some of the common issues we see there are the incorrect calculation of the prescribed account. And that's generally where clients have used the incorrect minimum balance. So in terms of calculating your prescribed account, basically have to have your lowest combined balance in the previous calendar year, and then take 2/3 of that combined balance and round it down to the nearest 100. Now, it's pretty easy to use to identify the incorrect minimum balance. It's also easy to use a financial year rather than a calendar year to calculate that minimum prescribed balance. Quite often we see that, but when you're calculating your prescribed account, you must go off a calendar year. And if you have to make a payment into your prescribed account, that has to be done by the 21st of January each year, as does the reporting what your minimum prescribed balance is to the QLS. Okay, well that kind of wraps up all of the common issues that I wanted to get through today. Hopefully that's been informative. I've touched on some things that you can think about when you're next preparing for your trust account audit. For those of you that have sent through questions, I will endeavour to get back to you over the next couple of weeks. The next couple of days. My apologies. I've just run out of time to complete those now, but if you could get back to me, I will send them in and I will email you or give you a call to discuss. And if anyone is interested in hearing more about Vincents Audit and Assurance and the services that we can provide, please feel free to be in touch with myself or with Bridget, who has organised the webinar. Thank you very much for your time today.